Kia ora koutou. Thanks for joining us today. I'm Lex, an advisor here at Charity Services, and I'm joined by Dawn Logan, our capability accountant. We are co-presenting this webinar today. The webinar is directed at charities that complete their annual reporting to Charity Services under the Tier 3 not-for-profit standard. A little bit of housekeeping before we start. Can you hear us? Make sure your computer is unmuted and check your internet if you're having trouble. In the unlikely event that our sound cuts out, we will work through any technical difficulties and aim to be back in touch with you as soon as possible. The webinar is being recorded, and we will send you an email with the recording link and any resources we discuss. We have allowed time at the end for answering questions, so please type your questions into the Q&A box as you think of them. Please note, however, that we won't be able to answer questions specific to your charity. For questions specific to your own charity, please email us at info@charities.govt.nz. You may also need to seek independent advice. Before we continue, we want to make sure you're in the right webinar. This webinar is an introduction to the Tier 3 not-for-profit financial reporting standard introduced in May 2023 and is designed for Tier 3 charities who have not reported before or who may want to be reminded about what is required. We'll call this the Tier 3 standard for this webinar. How do you know if you should choose the Tier 3 standard? The Tier 3 standard can be used by those charities who use accrual accounting, do not have public accountability, and whose operating expenses are less than $5 million per year. Operating expenses include money spent on day-to-day costs. It does not include the purchase of assets such as computers or investments like stock. Accrual-based accounting is when revenue is recorded on the date you issued the invoice rather than the date money was received. Expenses are recorded when incurred, and it includes depreciation of assets. Charities using accrual accounting often use accounting software such as MYOB or Xero. While all charities are generally considered to be publicly accountable, public accountability has a specific meaning in the accounting standards. Generally, it includes entities whose main activity is holding cash or other assets on behalf of others, like a superannuation scheme, or who issue debt or equity. If your charity does fall into this definition, you must report under Tier 1. The full definition of public accountability for financial reporting purposes can be found on the External Reporting Board XRB website. Registered charities have multiple obligations, including filing annual returns every year. What you put in your annual return appears on the Public Charities Register. This lets people see what your charity is doing and helps create a complete picture of the charitable sector. Completing your annual return and doing it correctly is a very important part of remaining registered. It helps build the public's trust and confidence in your charity and the charitable sector. Charity Services helps you understand your obligations and make sure you're meeting them. This can include educational activities like today's webinar. Charity Services also manages the Charities Register, monitors charities' compliance with their obligations, and, when necessary, takes appropriate regulatory action. This is all part of our responsibility to be an effective regulator. However, as a regulator, we cannot provide legal or accounting advice. So, what can you expect from the webinar today? First, we'll explain what the annual reporting requirements are for registered charities. Next, we'll explain the purpose of the performance report and go through the 6 sections of the report. We'll provide an example to show you how to complete the performance report template. And we'll discuss what information you'll need to collect throughout the year to make reporting easier. Remember, you can watch the recording at any time. We will email you the links to the webinar recording and any resources we mention. As a registered charity, you are required to report to Charity Services every year. This is called an annual return, involves 2 key components: a completed performance report and a completed annual return form. Most people find it quicker and easier to complete their annual return form online. In the annual return form, you'll first need to either update your charity's details or confirm that the registered details are still correct. Once you've confirmed or updated your details, you'll then need to answer some questions about your charity. Some of the information may be the same as what's in your performance report, so make sure you refer to your completed performance report for the answers. Your annual return, including the performance report, will be publicly available on the charity's register. Additionally, the data you provide through the online annual return form is collated with the other charities on the register and can then be used to tell a story about the wider charitable sector in Aotearoa. Your charity must report to Charity Services within 6 months of your financial year ending. For example, if your charity's balance date, which is the end of your financial year, is the 31st of March 2025, then the last date to file your annual return is the 30th of September 2025. What are financial reporting or accounting standards? The standards set out how the not-for-profit sector should prepare financial statements. This means you'll use the standards when you complete your performance report. The standards are developed and issued in line with international standards by the External Reporting Board, XRB, which is an independent Crown entity. They provide a standardized way of accounting for the not-for-profit sector to ensure information is clear and comparable. As charities can vary so much in size, the XRB created 4 different tiers of reporting. You can find the right tier for your charity by visiting the Charity Services website, charities.govt.nz. The Tier 3 NFP standard is in effect for financial years that began on or after 1st of April 2024. Charities with a balance date of 31 March 2025 are the first group required to use the updated standard to create their performance report. However, charities with earlier balance dates that are currently preparing their performance reports can also use the updated standard. For example, if your financial year ended in December 2024 and your performance report and annual return are due by the end of June 2025, you can choose to use the Tier 3 NFP standard. Now we're going to look at the different parts of the performance report. The performance report includes non-financial and financial information, and overall is designed to show your charity's basic information, its main activities, and how money came in and out of your charity. The Tier 3 performance report has 6 distinct sections: 2 non-financial statements, entity information and the statement of service performance, 3 financial statements, the statement of financial performance, an income statement, the statement of financial position, a balance sheet, and the statement of cash flows, and the accounting policies and notes section, which provides more context for the previous sections. To help with your reporting, the XRB has created an Excel template of the Tier 3 performance report. You can find this template on our website, charities.govt.nz, and on the XRB's website. Be sure to choose the template specific to Tier 3. The template has green and yellow boxes. You must fill in the green ones if applicable to your organization. Yellow boxes are only required if the information is easily accessible. The XRB has also provided guidance within the template to help charities understand which fields are optional, required, or required if applicable. We recommend using this template the first time you report, as it is designed to help you report everything you need to. However, the template is optional, and we will accept performance reports in other formats as long as they comply with the requirements of the Tier 3 standard. For the purposes of today's webinar, we'll be using a charity we made up to show you around the Tier 3 template. We have named it the Awhina After School Care Trust. The purpose of this charity is to provide free after-school care to students of local primary schools. They were initially set up with a donation of $5,000 and were gifted a very old computer. They have since expanded and now use grants provided to them by the government so they can pay wages. They also sell calendars containing artwork made by the children who attend the after-school care program as a way to raise extra funds. They are applying the Tier 3 standard for the first time for the financial year that ended on the 31st of January 2025. Now let's look at the non-financial parts of the performance report. As mentioned, the non-financial information consists of two statements, the entity information and the statement of service performance. We'll look at the entity information first. The entity information is an introduction to your charity and asks you to talk about what you're set up to do and how you're structured. This is the first page that people will look at in your performance report. Remember, your performance report is displayed on the charities register where the public can look for information about any charity. You'll see that all of the fields except for the entity identifier are required. The first part asks you to record your charity's legal name and any other name you're known by, your charity's identifier, which will be your registration number or an NZBN if you have one, the financial year-end date, and the type of entity. For example, you may be a charitable trust or an incorporated society. Below that are more detailed questions like your charity's purpose or mission. This is what your charity is set up to do. Our example is Awhina After School Care Program, and their mission statement is to provide a free after-school care program to children in our community and provide support to students of local primary schools. You can see that this simple statement clearly explains the purpose of this charity. The next field is entity structure. Here you're asked to briefly describe your charity's structure. That is, are you a standalone charity or do you have branches? You'll see Awhina has provided information about their simple structure. Information about how your charity is governed is also required. Awhina Trust has stated that it is governed by 4 elected trustees and has listed their titles. The last part of the entity information section asks if your charity controls any other entities for financial reporting purposes. If so, list these entities here as well as their charity's registration number or NZBN if applicable. For more details on control relationships, visit the Charity Services website. The final field asks about your reliance on volunteers and donated goods and services. If you don't have volunteers or donated goods or services, you can leave this blank or write not applicable. If your charity does use volunteers, describe them here to let readers know how your charity utilizes donated time and/or goods and services to meet your purpose. The Awhina Trust relies on volunteers to help alongside paid staff and also for fundraising events. The next section in the performance report is the statement of service performance. It asks you to describe what your charity is aiming to achieve over the medium to long term. That is, what effect your charity intends to have through the activities it undertook during the year. The statement of service performance also requires charities to describe their main activities and provide quantities if you're able to do so. You don't need to list everything you did, just the most important activities. The Awhina Trust have provided their objectives. They aim to supervise up to 35 children after school on a regular basis and provide essential school supplies for local families in need. You can see that Awhina has detailed the activities during the year that support its objectives. They've provided after-school care for 190 days, had an average of 24 attendees at after-school care, and provided grants to 10 families for wet weather gear. If you look at the far right column on the screen, you can see that the column for last year is blank. If this is your first year of reporting, there will be no figures for the previous year. If this is not your first year reporting, you must provide figures for the previous year, even if that figure is 0. Collecting the details needed for the entity information section shouldn't be too difficult. Your constitution, trust deed, or rules document will have information on your charity's purpose, what it was set up for, and the legal name of your charity. This section can be completed at any time throughout the year. Remember, the purpose of the entity information is to introduce your charity to readers and give them a quick understanding of your organization. A plan at the start of the year about which activities your charity will undertake makes this section easier. You can then decide what data and information you need to collect throughout the year to support it. If your charity is required to be audited, consider how you will keep valid records. It's a good idea to have a meeting with your auditor at the start of the year to plan this out. That way you can make sure you're both in agreement on record keeping and decide together on what evidence you'll need to collect for your statement of service performance. Charity Services has information on our website to help you understand if your charity is legally required to be audited by a qualified auditor. I'm now going to hand over to Dawn, who's going to take you through the last half of the webinar and discuss the financial parts of the performance report.
Thanks, Lex. Hi, everyone. I'm going to talk you through the financial statements for Tier 3 charities. There are 3 financial statements required for Tier 3 charities. The first is the Statement of Financial Performance. This section reports revenue, expenses, and the net surplus or deficit of your charity for the financial year. Some of you may also know this as an income statement or profit and loss statement. Next is the Statement of Financial Position. This statement provides a snapshot of your charity's assets, liabilities, and accumulated funds at the balance date. Some people might like to think of this as the balance sheet. And finally, the statement of cash flows. This section provides information about the sources of cash and what it was spent on during the year. It is also worth noting that while the statement of accounting policies is part of the notes, it is very important as it provides context to the financial statements. There are 3 key components to a statement of financial performance: revenue, expenses, and net surplus or deficit. Revenue represents all of the income that your charity has received during the year. It includes things such as cash received from sale of goods and services and grants. It also includes money to be received from interest or from invoices sent to customers who have not yet paid. Expenses represent all of the costs your charity has incurred during the year. This covers day-to-day costs such as rent and salaries. It also includes items like depreciation or invoices received for bills which have not been paid yet. Net surplus or net deficit is simply the difference between the revenue and expenses. This net figure shows whether your charity received more money than it spent during the year, or if it spent more money than it received. On the right-hand side of the slide, you can see the completed statement of financial performance looks like for the Athena Trust when using the template. You'll see all of the transactions have been grouped into revenue and expenses, and the value of these has been entered into the columns of the template. The next thing you may notice is that there are only a few lines under each of the headings. This is because the Athena's trust revenue and expenses have been classified into the minimum required categories. You'll see there are 9 categories in which to place your revenue and 7 categories in which to place your expenses. If you use accounting software, you'll need to consider the best way to group your revenue and expenses into the minimum categories. Please think carefully about where you place your transactions, as a category should be used consistently so comparisons can be made between financial years. If you want to provide more information on revenue and expenses within these categories, you can do this in the notes. For those who have used the previous Tier 3 standard and template, you'll note the minimum categories have changed for revenue and expense. You'll have to regroup your previous year's information into the new categories when using this standard for the first time. The surplus or deficit for the year is what is left over after subtracting expenses from revenue. The Excel template will calculate this automatically for you. The second part of the financial statements of the performance report is the statement of financial position. It has 3 parts. Assets are the things your charity owns and what is owed to it. For example, cash in the bank, buildings, and money owed to you. Liabilities are the obligations your charity has to others and what you owe. For example, loans from the bank or money owed for things you have purchased. Accumulated funds are all the surpluses your charity has had over time, plus any money put into the charity by the owners or trustees. All of the numbers in the accumulated funds section are populated from Note 7, which we will discuss shortly. You'll notice that assets and liabilities are divided into current and non-current. This helps identify whether the item is short or long-term. Current assets are short-term assets that can be sold, consumed, or converted into cash within 12 months. For example, inventory or prepaid expenses, like a 6-month insurance policy that was paid for up front. On the other hand, a vehicle would be expected to be used for several years and therefore is a non-current asset. An example of a current liability is payroll tax, and a non-current liability would be a long-term bank loan. The template has been designed to automatically calculate subtotals and totals based on the information entered. At the bottom of the statement is the total accumulated funds. This figure must equal net assets, and net assets are the total assets less total liabilities. The template will indicate if they are not equal. If you get an error message, you will need to double-check the amounts you entered for assets and liabilities, as well as the figures entered in Note 7. This brings us to the third financial statement, the statement of cash flows. The purpose of this statement is to show how much actual cash came in and went out of the charity during the reporting period by removing any non-cash transactions. This is because accounting entries can sometimes disguise the amount of cash used in a charity due to accrual accounting items like depreciation or accrued expenses. The standard requires that cash received from operating activities is reported separately from cash related to other activities, such as investing in assets or receiving or paying loans. If you have reported before using the previous Tier 3 standard, you'll notice that the categories on the statement have changed as well. The categories in the cash flows from operating activities section are the same updated categories found in the Statement of Financial Performance. However, only cash transactions are reported here. Calculating a cash flow statement can be quite involved, so we will not go into detail today. However, you can see an example cash flow statement for the Athena Trust on the slide. There is another balance check here. The closing cash figure is checked against the bank accounts and cash figure on the Statement of Financial Position. We are now on to the last section of the performance report. The section is called Statement of Accounting Policies, but it also includes the notes. The purpose of this statement is to provide context to other parts of your performance report. In the Accounting Policy section, there are 3 disclosures that are mandatory for the Tier 3 charities, one that is required only if applicable to your charity, and 4 optional disclosures. The basis of preparation statement has already been completed in the template. It states that your charity is allowed under the law to use Tier 3 and that it has prepared the performance report using accrual accounting. It also states that your charity intends to continue operating. You probably will not need to change anything here. The next disclosure is the treatment of GST. Included by default in the template is a paragraph stating that your charity has prepared the financial statements excluding GST. The assumption is that most Tier 3 charities will be registered for GST. If your charity is not registered for GST, you will need to change the statement here to reflect that. The Athena Trust is registered for GST, so it has left the statement as is. The last required disclosure is called Changes in Accounting Policies. Any change in accounting policies that have been made during the year should be disclosed here. For example, if you changed how you value buildings, you would state this here. The standard requires specific information for each change, so please refer to the guidance within the template and the Tier 3 standard. Where there have been no changes to accounting policies during the financial year, this must also be reported. The Athena Trust has not changed any accounting policies and has noted this in the template. There is one disclosure that is required if applicable. Tier 2 public benefit entity standards applied, if any, and Tier 3 entities are allowed Tier 2 public benefit entities applied, if any. Tier 3 entities are allowed to apply a Tier 2 standard when needed for certain transactions. This could be to prepare consolidated accounts, revalue property, plant, or equipment, or revalue investments. If a Tier 2 standard has been used, charities are required to note that here. The template also includes optional disclosures relating to income tax and bank accounts and cash, and provides 2 additional spaces for disclosures if required. The final parts of the performance report that are required are the notes to the performance report. Notes are used to provide further explanation for the information included in other parts of your performance report. The template includes 4 mandatory notes, 5 notes that are required if applicable to your charity, and 4 optional notes. The required notes are Note 7, Accumulated Funds, Note 8, Commitments and Contingencies, Note 10, Related Party Transactions, and Note 11, Events after the balance date. The notes that are required, if they are applicable, are Note 5, Property, Plant, and Equipment, Note 6, Investments, Note 9, Other, which includes deferred revenue, money received with conditions, and money held on behalf of others, Note 12, Ability to continue operating, and Note 13, Correction of errors. Finally, notes 1 through 4 are optional. These are available for charities who want to provide readers with more detailed breakdown of the minimum categories in the statement of financial performance, statements of financial performance, and financial position. These are the revenue, expense, assets, and/or liabilities shown in the financial statements outlined earlier. For example, if your charity receives grants, you may want to use Note 1, Revenue, to provide more detail about the funder of each grant and how much was provided. Note 2 can be used to provide more detail for expenses. Notes 3 and 4 can be used to detail assets and liabilities shown in the statement of financial position. As these notes are optional, you can use all of them or just parts of them. You'll see Athena Trust has chosen to provide additional information for donations and the grant revenue they received. Because the detailed amounts equal the amounts shown on the statement of financial performance, the checkbox to the right is green with an OK message. Athena did not provide further information for the revenue from commercial activities, and so the checkbox is red and indicates that the current year information does not match the statement of financial performance. This error message can be ignored because no information was entered here. You only need to complete Note 5 if your charity owns physical assets like property, plant, and equipment. The major categories of assets have been pre-populated into the template, land, buildings, and vehicles, but can be changed to suit your charity. This note tells readers what your assets are worth in this year's performance report compared to last year's. It does this by taking last year's value, adding the assets purchased or donated during the year, and subtracting any assets sold. Depreciation is also subtracted to arrive at the closing carrying amount. The note is set up to calculate automatically based on the data entered into the green fields. We can see that during the year, Athena has obtained a vehicle worth $25,000. We can also see that they had depreciation of $2,500. This gives us a closing amount of $22,500. Below this table is a section for charities to provide details on significant assets received as donations. Charities must disclose the value of these assets and explain how and when the value was determined. You can see that Athena has recorded something here, a donated van for $25,000. Athena estimated the value by looking for a similar used vehicle online. The last section of Note 5 is significant assets donated, but not recorded. Charities must disclose significant assets received as donations, even if the value cannot be determined and the asset has not been recorded in the financial statements. An example of this would be a donated piece of art that has never been sold. Note 6 is only required to be completed if your charity has investments. The template already includes common investment categories like shares and bonds, but you can adjust these to match what your charity holds. Similar to the previous note, this table shows the value of your investments in this year's performance report compared to last year's. For each class of investment, you must disclose the valuation method. The note is set up to calculate automatically based on what is entered into the green fields. Athena Trust does not have investments, so no information has been entered. Note 7 is accumulated funds. This note must be completed. It is very important that you get this note right because the numbers entered here will also be populated into the statement of financial position. The purpose of this note is to explain three things: how much members or owners of your charity have contributed over time, as well as how much has been returned to them, how much surplus or deficit the charity has accumulated over its life, and any reserves it has set aside for specific purposes. Capital is any money given by owners or trustees. For the Athena Trust, we can see that they started the year with zero capital, and they received $5,000 from trustees, resulting in a closing capital of $5,000. Accumulated surplus or deficit is the total of all of the surpluses and deficits your charity has experienced over its lifetime. The template will calculate most of this automatically. Reserves are money your charity has set aside for a specific purpose. You'll see there are three categories of reserves: restricted reserves, discretionary reserves, and revaluation reserves. We don't have time to go into detail today about these reserves, but you can read more about them in the Tier 3 reporting guide on our website. However, if your charity does have restricted or discretionary reserves, the nature, purpose, and amount of each reserve must be disclosed in the space provided. Note 8 is for commitments and contingencies. This note must be completed. Commitments are situations where there has been no financial transaction, but your charity has agreed to a future commitment. Athena has recorded a commitment here for the building it leases for after-school care, so it will delete the alternate paragraph below. Contingencies are events which are outside of your control, but could cause a significant cost to your charity. For example, a court case that your charity is involved in where you may owe money if the other party is successful. Guarantees provided are any formal agreements your charity has made for another person, such as being a guarantor for a loan. Athena has no contingencies or guarantees, so it has deleted the tables and left the statement that there are none. Note 9 is only required to be completed if your charity has the following: deferred revenue, such as unused grants or donations with specific usage expectations. Athena received a government grant to pay wages, but had some funds left over. These are included here. Goods or services received in kind, for example, free accounting services. Assets used as security for liabilities, for example, a loan secured by a building, and assets held on behalf of others. Athena has deleted the notes that were not applicable to them. Note 10 is for related party transactions. This note is very important and is required to be completed. For financial reporting purposes, a related party is someone that has significant influence over the charity. You can think of this as the power to make decisions. Officers, committee members, or others who make decisions for the charity could be considered to have this power. Close members of their families due to their relationships and other organizations that have significant influence over your charity. The standard requires charities to report related party transactions for transparency, as these relationships can affect how charities operate. Related party transactions could either be a transaction involving money or a transaction in kind. As you can see, Athena Trust has had a related party transaction. John Smith is the chairman of the trust and is considered to have significant influence or decision-making power in the trust. Because he controls a used vehicle company, his company would also be considered a related party of the trust. We can see that his company donated a used van worth $25,000 to Athena Trust. There is also a pre-populated box which states that there are no related party transactions. Because this does not apply to the Athena Trust, they have deleted this box. Note 11 is for events after balance date. This note must be completed. This note tells readers about any significant events that occurred after the financial year ended. For example, if the Athena Trust lost its funding stream, as this would not be reported in other sections of its performance report, it would be included here as this is important for readers to know and may affect the decisions made by readers. Please refer to the guidance in the template as well as the Tier 3 standard. Because the Athena Trust has nothing to report here, we would delete the table and just leave the paragraph below. Note 12 is ability to continue operating. This note is only required if you intend to wind up your charity within a year or if it is likely the charity will be unable to continue operating. The Athena Trust has left this note blank as it is not applicable. The final note, Note 13, is correction of errors. The purpose of this note is to provide readers with information about significant errors relating to previous years that have been corrected in the current year's performance report. If your charity has corrected an error in the current performance report, this note must include the following for each error relating to a previous financial year: the cause of that error and how the error has been corrected in the current financial year. That completes the financial information sections of the performance report. We spoke about the 3 required statements: the statement of financial performance, or income statement, the statement of financial position, or balance sheet, and the statement of cash flows. We discussed how these statements are supported by additional information disclosed in the accounting policies and notes. The final step to complete the performance report is to ensure it is signed and dated by the officers of your charity who have the authority to approve the performance report. Charities are required to show in the performance report when it was approved and authorized to be published, who gave that authorization, and their signatures. A digital signature is acceptable here. In the XRB template, the signature field is just below the statement of financial performance. Your next steps are to start thinking about how you collect the information you need to prepare your performance report. If you use Xero or MYOB accounting software, you may also consider how to group your revenue and expenses for the updated minimum categories required by the Tier 3 standard. It is good practice to track any grants you may receive and how you spend the money, especially for grants that have conditions attached. Collecting data throughout the year is essential for completing your performance report. If your charity is legally required to undergo an audit, make sure you talk to your auditor about what evidence they will need to support your statement of service performance.
We now have some time for your questions. Please type your questions into the Q&A box if you haven't done so already. We'll do our best to get through as many questions as we can. We just request that you not ask questions specific to your charity. If you have specific questions, please send us an email. Our email address is on the slide. First question. I'm able to do all the spreadsheet except for the cash flow report. This cash flow sheet does not base the cash flow report that comes out of MYOB, which is the accounting program we're using. How can I do that? Or can I just submit the MYOB cash flow report instead?
You can submit the MYOB cash flow report if it has the minimum categories. I'm not sure if they have structured it that way. If not, you may need to use Excel to bridge the two so that you can fill out the template.
Fair enough. And where do I report unrealized capital gains and losses and investments in the statement of performance?
Unrealized capital gains. Let me come back to that one.
Fair enough. Where do I enter term deposits over 90 days maturity?
That would be a longer term asset, probably as an investment.
Makes sense.
Depending, yeah, because the standard says 3 months or less, so anything over that would be an investment.
Do I show GST and cash flows separated in received and paid? They use zero, shows it now separated.
I'm not familiar with what zero shows, unfortunately. I can only see that I'm looking at the statement of cash flows. Received and paid. I think there's only one line, if there's any at all. Listen, it's just whatever's easiest, really. There's no particular way to show GST. If zero separates it and that works for you, then you can continue doing that.
Is there a link to this template? And will these slides be available as a reference as we put our reports together?
Lex, you want to take that one?
Absolutely. You can download a copy of the performance report template from our website or XRB. The invitation you received has a link directly to it, or you can just navigate to our website, so click on reporting standards, and then select tier 3. Within that page, scroll down a little bit, you'll see the new templates and links to the standards. We're not going to send these slides out, but the recording of the webinar is going to be available to you, and we're going to email the link to the recording to everyone who signed up.
Go back to the first one.
Where do I report unrealized capital gains and losses on investments in the statement of service performance or the
Financial
performance?
Look, I've had another look, and I think really it's just going to have to go into either other revenue or other expenses. Although I would just stick with other revenue if it's losses, because you can show that as a negative number.
If we use the Excel template for the report, can it save to PDF?
Yes, I believe it can.
Is it expected that all unspent grants are recorded as both reserves and deferred income and no longer shown as current liabilities?
There is a flow chart within the standard that covers deferred income, deferred revenue. Have a look at that. It leads you all the way through of where you need to report things depending on your situation.
Fair enough.
We also did a webinar of just the changes for tier 3 standard. And it goes into a bit more detail about deferred revenue. So you might want to have a look at that. It's on our website and our YouTube channel.
How to define a related party? Is that accounting fee and employees are related parties?
As we mentioned, related parties are those who have control or decision-making power over your charity. So there will be particular employees that will fall into that definition, as well as their spouses or any related entities. Have a look as well at the guidance on our website or within the standard itself.
If we've been using the previous XRB template for years, Do we need to switch to this template this year?
Yes, you do. The standard has changed for years that have begun after the 1st of April last year. And so therefore the template has also changed.
Does the performance review have to be done by a registered accountant?
If you are required to have a review under the Act, then it needs to be done by a qualified auditor. That information could be found on our website or within the Charities Act.
Yeah, fair enough. What information do we need to submit or include regarding branches? I think this is about structure.
Oh, take that one, Lex.
All information about your structure should be included. Don't go into so much detail that it's that would be unnecessary, like their addresses. But if you've got a central office and branches, you would describe that, include the number of them. But if you're a single office, a single location, that's what you would have in your structure. That's how you would describe it. I've been trying to follow the template during the webinar, but your website is the older template for downloading. The new template is definitely there. It's towards the top of the page on the Tier 3 page of our website. The link on the email that we sent out, the invitation, takes you directly to the spot where you'll download the up-to-date template, and they're labeled with the correct standard. So it'll say Tier 3 NFP standard. The older versions of the template are labeled with the old standard as the name. If we're re-registering as a charity during the current reporting year, do we treat that as our first year?
That's more of a specific question. If you could email us, it would be better.
For the first year completing the updated template, are you best to use the new template or review and amend the old template? Which would be easier?
For the first year completing the updated template.
I think it'd be easier to use the new template rather than trying to change the old one. But you do have to remember to include your previous year. So what I'd say would be easiest, get a copy of your old performance report, your most recent one, have a look at the minimum categories and put those transactions into the new categories so that you've got the comparative information.
Yeah, keep in mind that they have expanded the categories significantly from the previous template. So for example, with expenditure, they used to combine employee information with volunteer expenditure, and now they've separated it. So employee expenditure is separate from volunteer expenditure. So you'll need to also separate that information for the prior year because you need it to be comparable across the years. So it's definitely easier to use the updated template for that reason. There are also now several categories of grants. Again, have a look at our more detailed Tier 3 webinar that goes into only the changes that have been made. If you are familiar with a previous template, it will help you figure out what the main differences are and how to handle those.
Absolutely. If our revenue threshold is well below the Tier 3 level, but have some minor accruals, can we use the Tier 2 or Tier 3 format?
You can use any standard that is accrual. I wouldn't recommend stepping up to Tier 2 if you only have a couple of accruals. I wonder if you meant Tier 4. You can only use Tier 4 if you're cash-based. If you use any accrual accounting at all, you must use Tier 3 or higher.
Thank you. Makes sense. If the trustees want to change their financial year, for example, from the 31st of March to 30th of June, is it possible?
Hey, Lex, you want to answer that one?
Absolutely. You can definitely change your financial year. It's a little bit of a process. So have a look at your rules, find out what you need to do to make changes and decide on those changes. Follow your internal process to make the decision. Once that's happened, you'll need to update places where you're registered, including charity services. And for us, that's just logging into your dashboard, clicking on update details, submitting an update form with that change. Keep in mind, though, that the change isn't automatic. It won't just process itself once you've submitted the change. It'll come to us for review to make sure that it's a legal change. Once we've processed it, we'll let you know exactly what your next reporting period is and what due date it will have. We've got time for, I think, 2 more questions. If we have traditionally used cash basis for our accounts, do we have to change to accrual basis to report under Tier 3, or do we report under another tier?
If you have traditionally used cash basis, that's of course Tier 4. If you are using accrual for any reason, you must use Tier 3 or the higher ones. I recommend using Tier 3. It is a bit simpler than using Tier 2 or Tier 1. The reason I say that is Tier 3 has one standard, so you read one document. Once you move to Tier 1 or Tier 2, there are 30 documents to consider as you prepare your financial statements. It's a bit intense. So if you want to continue using the cash basis, you can only report in Tier 4.
Fair enough. And it sounds like Tier 2 is a lot more work than Tier 3 or Tier 4.
In my opinion, it is, yes.
Fair enough. The trust is set up mid-April and has had no transactions prior to June 30th. Do I still need to file a performance report for the first year?
Go ahead, Lex.
If you're registered, then you have to report. If you're a registered charity, even if you're not operating yet, or you haven't had any transactions or activity in a certain period, if you are registered with charity services during that period, you still need to report even if the answer is 0. So, for example, if you became registered in April of 2024 and your first reporting period is for the financial year ended 31 March 2025, you will need to include everything from the moment you're registered up to the end of that financial year. Okay, one last question. Regarding signing the report, is it a matter of printing the whole report off, getting it signed, and downloading it, or is there another option?
Look, you have 2 options. You can print it out, especially just that one page. Ensure that whoever is authorized to sign it and approve it reviews the entire thing. They are happy with it and they sign it. They can also look at it within the software. And like I said, digital signatures are accepted, and that can either be where they create the digital signature within the software or just typing their name in. That also suffices as a digital signature. We just want to ensure that readers know that those in charge of authorizing the report and approving the report have reviewed it, are happy with it, and have approved it for publication.
And the example we had on the slide was a digital signature.
That's right. And the most important part of that really is the date, because that puts a line in the sand to say this report covers the information for the financial year that we stated. And if we said anything major happened after a year end, it's between the date of your end of year and the date it was signed. So everyone reading it knows that that is the date that you are not only happy with it, but that nothing else is being reported after that date.
Fair enough. We understand there was a lot of information included in the webinar today. Remember, you can revisit it again when you're preparing your performance report, as it will be available on our website. We hope that attending today's session was useful to you, and you now understand more about how to use the template to prepare the performance report. If we didn't get to your question, please reach out to us via email or phone. Thank you for attending, and all the best with your reporting.